Hey everyone, it's Julie here with TipRanks. Today, we're taking a look at three stocks that, despite volatile markets, Wall Street analysts have been increasing their price targets on them. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, we're taking a look at a few stocks that have been gaining attention from Wall Street analysts lately. And despite these volatile markets with ongoing trade concerns and inflation worries, analysts have actually been raising their price targets on these stocks. So today, we're going to take a look at these companies, what it is that they do, and what has analysts feeling increasingly bullish for the stock's future. All of our stocks today also score a 10 out of 10 on the TipRanks Smart Score, and that looks at 8 unique factors measuring a stock's likelihood to outperform the overall market. Just before we jump into these companies, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's jump right into these three 10 out of 10 stocks. We're going to kick things off with the Intercontinental Exchange. They trade under the ticker ICE or ICE, currently priced at $153. Overall, in the past year, they are up over 16.5%. In the last 3 months, are still up 9% despite recent dips this week. Currently scoring a 10 out of 10 on the TipRanks Smart Score, we've seen increased crowd wisdom and increased hedge fund activity, with hedge funds increasing their holdings by over 5 million shares last quarter. The Intercontinental Exchange is the powerhouse behind the New York Stock Exchange and a leader in financial data and trading platforms. They operate marketplaces for listing, trading, and clearing an array of derivative contracts and financial securities, such as commodities, interest rates, foreign exchanges, and equities, as well as corporate and exchange-traded funds. They have 13 regulated exchanges and 6 clearinghouses. They'll be sharing their first quarter earnings report on May 1st, and this does follow a fourth quarter earnings and revenue beat where the company came out with record results. For their fourth quarter, they saw record earnings and revenue, with their full year adjusted earnings per share totaling $6.07 and net revenues totaling a record $9.3 billion. The company also generated $3.6 billion in free cash flow and returned $1 billion to shareholders. And that was actually ICE's 19th consecutive year of reporting record revenue and earnings per share growth. Management said that it was a testament to the resilience of their all-weather business model. And it's true, even during volatile periods, ICE benefits as trading volumes spike and demand for their data soars. One analyst even called them a port in the storm. And just today, we heard from an analyst at Morgan Stanley who increased their price target, saying that the exchanges are a defensive safe haven in periods of uncertainty given greater need by market participants to manage and hedge risks. With 13 current analyst ratings, the ICE stock does come in as a strong buy, with 11 buys and 2 holds. Analysts' average price target comes in at $190, implying an upside potential of 24%. Looking at those most recent ratings down below, they range from a low end of an upside of 9% to a high end of nearly 50%. For our second stock today, we're taking a look at Sportsradar Group. Trading under the ticker SRAD, their stock is currently priced over $21 per share. Having climbed 85% in the past year, they are up 13.5% over the last 3 months. Currently scoring a 10 out of 10 on the TipRanks Smart Score with very positive crowd wisdom and very bullish new sentiment. Sportsradar Group is a leader in sports data and betting tech, providing everything from live stats to odds for major leagues. Headquartered in Switzerland, they provide their services to industries in the United Kingdom, United States, Switzerland, and more. Their company offers mission-critical software, data, and content to sports leagues, betting operators, and media companies, while also providing sports entertainment, gaming solution, and sports solutions. Even with volatile markets, the appetite for sports betting has not slowed down, as was evident in their latest quarterly report where the company saw record revenue growth, and they signed a deal with the MLB. Looking at their fourth quarter and full year earnings report, the company achieved total revenue of 1.1 billion euros for the full year. That represented a 26% increase, with US revenue growing by 58%. And they also secured an exclusive deal with Major League Baseball through 2032, enhancing their sports right portfolio, which is expected to be immediately accretive to their business margins. We've recently had a couple of analysts increase their price target on the stock, one as recent as today and the other just at the end of last week. A UBS analyst increased their price target to $29 today, saying that the narrative has significantly improved over the last 12 months, and so has investor interest. Last week, we heard from an analyst at Canaccord boosting their price target to $32, saying that the company is embarking on a multi-year golden period when it should achieve significant leverage on sports rights costs while benefiting from strong relationships. With 10 Wall Street analysts currently weighing in on the stock, it does come in as a strong buy with 9 buys and just 1 hold. The average price target comes in at $27 per share, implying an upside potential of 27%. Looking at those price targets down below, they range from a low-end upside of 3.8% to a high-end upside of over 50%. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Last but not least, we're taking a look at Expand Energy. Trading under the ticker EXE, they're currently priced just shy of $100 per share, having climbed 14% in the past year, down slightly at 1.5% in the last 3 months. They currently score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity and increased insider transactions. Expand Energy is the result of a merger last year, and they operate in the clean energy space. They were established through the combination of Chesapeake Energy and Southwestern Energy and stand as the largest natural gas producer in the U.S. Their core services include providing sustainable energy solutions to commercial, industrial, and residential clients, aiming to reduce carbon footprints and promote energy independence. They've positioned themselves as a low-cost provider with lean operations, and in their last quarterly report, the company did enhance their future outlook. For 2025, they're forecasting an increase in production to approximately 7.1 billion cubic feet per day for a capital investment of $2.7 billion. They also expect to achieve $400 million of annual synergy targets in the year. And that has Wall Street analysts feeling bullish. Just today, an analyst from TD Cowen upgraded their rating on the stock to a buy. They upgraded several gassy names, citing an improved risk-reward skew for the gas macro environment after the recent tariff announcement. And when we look back at last week, we also had analysts from Benchmark, Mizuho, and Morgan Stanley all increasing their price targets as well. Expand Energy has 21 current analyst ratings, coming in as a strong buy with 16 buys and 5 holds. And their average price target of $122 implies an upside potential of over 22%. Looking at those recent targets down below, you can see a lot of those analysts bumping up their price targets. They range from an upside of 12% up to 54%. So that is a quick look at 3 strong buy stocks that Wall Street analysts think can weather this current storm. Let me know your thoughts on these companies in the comments down below and what other opportunities you're seeking out during these volatile markets. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.